This week, we're speaking with Patricia Lovett-Reid, a financial journalist and longtime industry commentator about where we are with regard to the millionaire mindset and where people of all walks of life might be making better wealth decisions. Stick around. This is Make Better Wealth Decisions, a podcast about financial blind spots, decision-making, and how the reality of higher rates, global tensions, and tariff instability impact your investments. I'm your host, John DeGuy, a portfolio manager with Design Securities in Toronto. My guest this week is Patricia Lovett-Reid. She is a long-time financial journalist and a personal finance expert. She has been named one of the 100 most powerful women in Canada, and it's a pleasure having you on with me today. Patty, how are you?
Great, John. Thank you so much for having me. I've known you in the industry for a long time, and I have a lot of respect, so thank you.
Oh, boy. Well, it's certainly mutual. We were talking about that before we got rolling. I want to talk to you about your career path is unique. You started off, as I understand, as a bank teller, and yet you rose all the way to the point of being a vice president at TD Waterhouse and a television commentator. Can you maybe take a moment to walk us through your unique career path?
Well, I'll do the abbreviated version. I did not go to university because I am mildly dyslexic. And at the time, it wasn't actually diagnosed. And so I just thought I wasn't that capable of learning. And so the minute I graduated from grade 12, I went out and I found a job as a bank teller. And I took it because I thought, okay, this may be the start. I will also tell you, John, I've told the story many times. The day I walked in for the interview, the bank was being robbed at gunpoint for real. They said, everybody backed off. Things happened. The police came in. They said, we're not going to be able to interview you for the job today. You're going to have to come back on Monday. It was a Friday. I said, oh, no. I will wait. I am here. In my mind, I only had one outfit suitable for an interview. So I guess it was tenaciousness. There were two of us. The other person didn't show up on Monday. I did find another outfit. I got the job. But when I was in that teller role, I kept looking at the next position and thinking, how might I find a way to progress towards that? But when I was at the Bank of Montreal, I got to the highest level of clerical rankings. And I didn't think I could move into management because I didn't have a university degree. Lo and behold, after conversations, I was offered a management training program at TD. I switched organizations. By the way, years later, Bank of Montreal have said to me, the only person holding you back was you. We didn't say you couldn't progress. You made the decision. And the lesson I took from that, John, was I got to get out of my own way. Let it go. I can learn and I will learn. I just will never read, for example, a teleprompter because that is not in my wheelhouse. And so then I started to progress through TD, and my last role at TD was a senior vice president at TD Waterhouse, and I loved it. And then I was offered a job in TV. I remember thinking, though, John, who goes into TV at this stage in their life? But they said, based on the financial knowledge that I picked up along the way, and my full purpose and point was to talk to the average Canadian because I am that average Canadian. I felt I could make the transition and, it kind of worked.
And obviously a great story in terms of grace under pressure and being unflappable, which I think are also positive attributes, but also being relatable. I think that's very clear. And that's one of the things I'm going to be talking about as we go into peeling back the layers of the onion with you, is that your hallmark is that you're just a person that people just find they're very comfortable listening to because you're very good at that. I want to ask you about what you're doing presently. You're currently the Home Equity Bank's chief financial commentator. And that's something different that I hadn't really expected from you.
Yes.
Could you maybe take a moment to talk to us about what that's been like?
I've now been with them for 3 years. It has been quite a growth curve. I know it was probably at some time, and I'm not sure that's the same today, the most disliked product on Bay Street. People did not want to take equity out of their home. But what I was starting to find is more and more people are reaching out to me about funding their retirement, living a longer life. looking at their funding options and the fear that they may outlive their money. And at the same time that I started to think that way, how can I help? I started to understand the reverse mortgage better. And so it's one of those things. It is a funding option for some to take the equity out of their home to live the lifestyle they hope to live all along, maybe in the last third of their life. And it isn't for everyone. It's not the only funding option, but it became important to me to say it is an option for some. And we needed to get beyond just thinking that this is for someone who simply doesn't have any money, they are in debt. It's like an emergency fund for someone who may have been savvy enough and lucky enough to get into the real estate market years ago, spent decades trying to pay it down, and today they were maybe house rich and cash poor.
Yeah. And it's funny because when we talk about making better wealth decisions, I'm just thinking, we're 200 episodes into this podcast, and I don't recall having ever spoken with anyone about the concept of a reverse mortgage. And it is a viable option, as you say. There are some who like it and some who don't, and there are reasons for and reasons against. And without going into too much detail, I think the point that everyone makes when it comes to personal finance is that you have to look on it at a case-by-case basis. How does this apply to you? And if it works for you, or if it could work for you, then you should at least consider it and look at it very closely just to see if it works appropriately. And it may not, but for many people it does.
It's interesting. Maya Angelou said, when you know better, we do better. And that may not be a direct quote. But my point is that when you do your research and you do understand the pros and cons, it's easier to make decisions in a whole host of ways when it comes to your personal finance. I met a couple literally a week ago, and they decided to go with the reverse mortgage. And I asked them why. And they said, well, first, we were very worried about leaving a legacy to our adult children. We talked to them. They said, Mom, Dad, this is your money. This is your life.
Exactly.
And you need to do what's right for you. They did take some money out of the equity in their home. And I said, how did it change your life? And they said, well, initially it did. I just like seeing that I had some money in the bank, that there was, not always a lot more month left than money left at the end of the month. And now on occasion, we go out for dinner and we enjoy it. And then they said, you know what? There might be even a trip with a group of friends in our future, which we wouldn't have been able to do before. They made the point of saying it gives us an opportunity to live without fear and worry every day. So yes, there is a cost. It's a reverse mortgage. You are going to pay a slightly higher rate because you're not making monthly mortgage payments. But for some, it's a price they're willing to pay. And I get it.
A lot of personal finance is about personal psychology. And I think what you're talking about is the peace of mind that comes from just being able to overcome what may have been a lifetime of feeling poor. And now you can feel, and I don't think people who have reverse mortgages feel wealthy necessarily, but they might feel more comfortable and a little less anxious than they otherwise might. And that even by itself has some real value. Let's talk about your career as a broadcast journalist. And you made your reputation by talking about how small intentional changes and money habits can have significant results.
Yeah.
Could you maybe expand upon that mindset?
Well, it's one of those things. If you look at the statistics, people will organize their cupboards over sitting down and looking at their finances. They will make a decision to plan a trip in minute detail, but they don't necessarily know their net worth. And I believe that when we get our financial foundation in place, it frees you up to do all the things in life that you want to do. But until you know your numbers, you're kind of guessing. And so I've always encouraged people to back up. And let's say if we look at a 12-month calendar, if you were to do one thing differently with regards to your personal financial situation, John, I can almost guarantee you'll be in a different place this time next year. And it's as simple as, I want to pay down this debt, or I want to have a goal to save this amount of money for something that really matters to me. I don't think I need insurance, but what if I do? I'm going to look into it. I can't remember the last time I updated my will. It's like a giant bicycle wheel. If you're the hub in the middle and each spoke represents an element of your financial life, and each month you just do one thing differently, just like a bicycle wheel, you start to gain momentum and you move forward. And to me, that's just really empowering.
So then I have a very similar question, and that is with regard to your reputation. You've also got a great ability to break down what other people might think of as being complex issues into small, digestible, relatable, actionable items. That's something that I struggle with all the time. And maybe what advice would you give to other people, but also what advice would you give to me as I try to get people to take small, relatable, actionable steps?
I'm probably not as smart as you, and that's why I have to break it down. So I will look at, for example, tariffs. And you hear a number and you hear it could impact inflation. Prices are going to go higher. And you think about the economy, it could contract. But that's great. And we can talk about that at a macro level. But I'm going to sit down with my husband and say, okay, let's talk about what this means to us, to our household. And when we start to do it on that level, I think that's what a lot of households are doing. You don't worry about losing your job when your neighbor loses their job. But if all of a sudden your industry's impacted and the potential is there to lose your job, what are you going to put in place? What would be your plan B? You're doing your plan A. You love your plan A, but plan B needs to be there just in case. And so that's why I encourage everybody to look at what's going on. You can't change the external environment, but you can change how you respond to it. I can change how we respond to it. And how we respond in our household will be very different than maybe you respond in yours. And that's where you break it down to the things that matter most to you.
It's funny because what I'm hearing you describe is decision making. And, for a podcast called Make Better Wealth Decisions, a lot of it is just being intentional and stopping and reflecting upon what could happen. You've got a plan of what you want to see happen. Now what does this look like if it goes the way we planned, and all the great things that we can aspire toward, but also what are the roadblocks? What could go wrong? And then if these things in fact go wrong, and you can't foresee all of them, how will we respond? What will we do differently? Will we just save less? Will we retire later? What have you? And again, there's no right or wrong answer, but you need to sit down if you've got a spouse or if you've got children or other people that you love that are part of your family unit, that are part of your household, and talk these things through, because it's not like there's a right or a wrong answer necessarily. Some are more right than others, but there's certainly going to be a more personal answer. And the more personal answers are generally better because they're more actionable, or because you'll feel committed to following through because it's your idea or whatever.
Someone can tell you you need to save for retirement. But if you're at an age and stage in life and other things have a stronger presence in your mind that you're worried about financially, you're not going to save for retirement. I can remember talking to our daughter when she got her first job, and I went, okay, let's start saving for da, 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 da. And she said, Mom, you need to stop. And I think she was all of like 16 or 17. And she said to me, and it stuck with me, that excites you, but it doesn't excite me. I'm not going to save my money for that. And I thought, all right, good point. So it's a very valuable lesson. No matter what your advisor says, what they say on the financial news, if it's not aligned to make you change your behavior because of the outcome is something that you're after, it's never going to happen.
It reminds me of what you talk about a lot, which is having clarity of purpose and having a plan. And a lot of 16-year-olds do not have a plan other than what they're doing on Friday night. But beyond that, they don't really plan. And the irony, of course, is that there's some academic research now that shows that for many people, it might not be even that useful to start saving when you're in your 20s because you've got so many other debts. And if you just pay down your debts and your career in order and do all those other things, maybe saving for retirement is the sort of thing that we shouldn't even be that worried about in our 20s. I mean, Again, not for
I listen, there's a lot of truth to that. You know what I did try to instill? We have 4 adult children, 9 grandchildren. So I'm carrying on this money legacy with all of them. I often will say, if you have one goal, when your father and I got married, we did a net worth statement. We listed down everything we owned, everything we owed, and that's where we were at a point in time. And we know it's fluid, but every year since we've been married, and we have been married over 30 years, we have done a net worth statement between December and January. And we've kept every one of them with the sole purpose of improving our net worth. And to your point, sometimes it meant paying down debt. Other times it looked for tax saving opportunities. Other times it simply meant, okay, we can build our investment portfolio, save for retirement, fund our children's education because that was important to us. So the point is it's fluid, it changes. It's a blueprint that allows you to sort of see where you're going. I guarantee you though, John, not a single plan we put into place over 30 years in January was the same plan we ended up with at the end of the year. Usually because I decided we had to spend money on something else. But that's not the point. The point is we knew where we needed to take corrective action and where we could take corrective action.
One of the things that, I don't know if you're familiar with Stephen Covey's The 7 Habits of Highly Effective People, but one of the things that he talks about is that your life should be more like a compass and not a roadmap. A roadmap tells you how far to go and when to turn and where and why. A compass is just this is the direction we're headed. We don't know what we're going to encounter along the way, but we know this is where we're going. And it sounds
this is the end
like
goal. And he also says, begin with an end in mind. And I will say that we always began the year with, here, we want to be better than this number this time next year. And we were. It may not have been by a lot some years, but we did.
Let's talk about something a little more positive and blue sky-ish, and that is the idea of a millionaire mindset. You've also spoken a lot about how people have, you need to sort of recalibrate your thinking. Not everyone is going to be in a position to be a millionaire, and a lot of the people that you speak with are just ordinary folk who might never aspire to that. But many people listening to this podcast and reading financial media do aspire to be, and many already are millionaires. What can you tell us about what you would call the millionaire mindset?
First, I want to say you certainly have done your homework. Yes, I have talked about this. I used to deal with millionaires. And when I talk about millionaires, these were people who had more than $25 million of investable assets. And I love to observe them. And so you start to see over time patterns. One of them was they were very frugal. Just because you can afford to spend doesn't mean you do. And so they made their decisions not always on wants or needs, but they recognized that they didn't single-handedly have to prop up the economy. They also would borrow, not to consume, but to invest. So if they did borrow, it wasn't to go on a trip or fund a holiday occasion for gifts, that sort of thing, but they would borrow to invest in themselves, in their business, in their companies, that sort of thing. They had razor sharp precision with their numbers. They always knew where they stood. I'm not saying that they would do, an income statement every day, but boy, did they know their numbers. The one thing I did like is that they always believed the next big thing is right around the corner. And I've tried to embrace that. I don't know what I'll be working on next. I don't know who I'll be working with next, but I'm always on the lookout. And you need to say yes to opportunities, new experiences, and challenges. But here's one I'll sort of wrap with on it, their legacy. We often talk about estate planning, and quite honestly, dividing up your assets, if you're doing it in a fair and equitable way, thinking about it in after-tax dollars, communicating it, sharing it with those who will be beneficiaries down the road. To be honest with you, John, that's the easy part. The bigger issue is the legacy that they want to leave behind, and thinking about, how do I really want to be remembered? What is the influence and the impact I want to have And so while we often think it's all about the money, you know what? It's rarely about the money.
It's the love in which you hope to leave behind.
Exactly.
Some of the things that you were talking about remind me of yet another book that I think you would be familiar with. About 30 years ago, a guy by the name of Thomas P. Stanley wrote a book called The Millionaire Next Door.
My favorite.
Yeah. And so just as a very quick summary, a lot of what Stanley talks about, and I think you would sort of, line of verse, these people don't always drive the fanciest cars. They're still happily married to their first spouse. They are frugal in their mindset and they're good savers. And they are not ostentatious in their consumption. They blend in and they may be millionaires, but they're next door. And a lot of their neighbors would know they were millionaires if they, unless.
The one thing that I absolutely took away from that, and by the way, I actually had our children read that book when they were in their later teens. We will not be providing them economic outpatient care. Is that not a great line? Because when you say, what is economic outpatient care? We have worked very hard for a lifestyle that we are enjoying. And our children have had great benefits because of that. But we're not going to necessarily fund their lifestyle without them showing that they contributed, that they're doing, that they have a life plan of their own. It doesn't mean we don't help them financially on occasion, because we do believe in the living legacy concept. But maybe not when they expect it, maybe not when they feel they need it, but we still do it. But I love that people say to our children, wow, your parents do really well. You must be doing really well. And they would go, no, not necessarily. My parents have worked for it and they are enjoying their life and we're working for it. And we hope to enjoy our life as well. That is a great, great lesson.
Great. So let's talk about the first derivative from what you're just sharing right now, which is financial literacy in general, writ large. You've been a veteran and you've been on TV and you've met lots and lots of people with all manner of different financial situations. And you've spoken with and worked with the 25 million people, but you've also had lots of opportunities to meet with ordinary people.
Yes.
What is your take on the state of financial literacy in Canada in 2025? What are we doing right? What are we doing wrong? What would you do different?
I love when I was recently introduced at a speaking engagement. I've been watching Patty for decades and decades and decades. And I thought to myself, couldn't they have eliminated one of the decades? But anyway, they're probably right. I have been around for decades and decades and decades. And there was a time when I know it was very basic. Like, we would say to people, if you stay in a savings account after taxes and inflation, you're actually losing money. Well, people understand that. I'm not a back to basics on many of the speaking engagements I do now because people know the basics, but they want to know that they're not alone. What I did see, there was a period of time when there was keeping up with the Joneses, being in a really low interest rate environment. People were telling me, yeah, I'm going to borrow because I wouldn't be able to afford this otherwise. And yet coming out of COVID, so many people said that did receive government benefits to me, I enjoy this level of financial flexibility. I'm going to change my behavior. I will say, I think there's been a little slippage. We are seeing debt levels continue to rise. We have seen interest rates go higher than they were at rock bottom. And I do think that there are many, many households struggling. And so keeping up with the Joneses is less apparent, but I think social media has still driven a lot of, if they can do it, why can't I? And I do worry about that.
So for the people listening at home, if you're enjoying this kind of content, this is a good opportunity for me to remind you, please like and subscribe because we need to get more guests like Patty on because it's wonderful, wonderful content. Before I let you go, Patty, I have one last question.
Okay.
The podcast is called Make Better Wealth Decisions. What advice would you give to listeners to help them make better wealth decisions?
I am a strong supporter of working with someone, working with an advisor. I say that, and I am a certified financial planner, but we have an advisor that we work with. And I say that because, yes, I have informed decisions. I do my research. I want to have a conversation, but I do find that I am not always on top of it every single day. And I like the idea that someone else is. They know who I am. My investments are aligned. We're in wealth preservation mode as opposed to wealth accumulation mode. And so for us, it may be a different mindset. But I do think that people will self-eliminate and say, I don't deserve a financial planner. I don't have enough money for a financial planner or an advisor. And I would say, yes, you do. You can go into your financial institution and they will help you. They will get the ball rolling. Because at the end of the day, even if you decide to do it on your own, and many are, and they're highly capable of it, no one's going to care more about you and your money and your wealth creation than you. So you need to be in the driver's seat of your financial life. Don't take a back seat to it.
Patricia Lovett-Reid, it's been a pleasure speaking with you today. I want to wish you all the best in your semi-retirement. You're trying to get completely out of the workforce, but it's just like the Godfather 3, just when you think you're out, they pull you back in. And you're obviously still making a major contribution, and I want to thank you for your time today.
John, it was an absolute pleasure. I hope we can do it again.
This podcast is not to be construed as offering specific investment advice. Please consult a qualified advisor before acting. My books, Stand Up to the Financial Services Industry and Bullshift, are available online. If you'd like to meet to discuss how the topics in this podcast affect you directly, please visit my website.